is pre-recorded, so I am just going back on what happened this week, and it's a fresh set of eyes at the chat. I can see the trade down here, so let's get to it. Bear with me, guys, bear with me. We will get there. It's hard on a smaller time frame to get all zoomed in and looking at it. Here we go. Right, we're getting there. Right, okay, so just looking at this opportunity in this trade, I'm going to kind of break it down. Obviously, I don't want to give too much away in terms of my strategy and my confluences, but I'm going to give you a few things to think about when or why I maybe took this trade. Okay, so you can see that I've got this line drawn out at 4,380. Why is that significant? Well, in the build up to taking this trade, you can see that when price has been around this level, it's been respected, suggesting that we've got some buyer strength in the market. So the other way that I can see that and identify that is because we've had quite a few touches over here, and we've had another one and another one here, followed by another one. So you're talking 5 or 6 taps into this area. So if I'm looking in as a retail trader to get into an opportunity, I know price is struggling to push lower than this, so that tells me that there's probably buying strength. And again, just to be mindful, guys, we're on the 1 minute time frame here, so normally, and I will have done for this trade, to get my overall bias for the day, I'd have been on the higher time frames first, and then to get my entries, I drop down onto the lower time frame. Okay, now talking about getting into the trade and confluences and things like that, the first thing we would probably say is that there's a strong level of support here. Then what am I looking for? Well, I'm looking for some sort of displacement candle, and I'll leave you guys to ponder and speculate on which candle you think that is. I don't think it's too difficult to say. I'm just going to change. Oh, I am on the dot actually. So price respects this level. It comes up. We get quite an impulsive move up, and entered on the candle. Closure this needs to come across on this one here at 4,391, and this is one of those trades that you would love to be in if you could be for every single trade, because you'll notice on entry minimal drawdown and straight up for a 1 to 2. The other thing that I'm looking at this one as well is the fact that it's been an aggressive push up. We've not had any real retracement after the initial push up. So obviously normally with a lot of my trades, if price gets to a certain point, whether it be some buy side liquidity or a key area in the market, I usually pull my stops up to my break even, making it a risk-free trade. And obviously in this instance, if I'd have made it risk-free up here, it would never have come back down to tag me out, and I would have ran on and did run on for a 1 to 2. Now I do remember this one. Unfortunately, it was one of those that obviously moved really quickly on entry, and I also mistyped my lot size, so I actually got a lower return, which is a shame, but sometimes that's just part and parcel of the game. Like even human error, or the experienced trader myself, I would class myself as fairly experienced. I was pushing on for 5 years now. Still make mistakes, and that's absolutely normal. That's absolutely fine. So that was this one. Really nice setup. Obviously, I'm not giving too much away as to why I got in, but you can kind of start to paint a picture as to why I entered this trade. I'm going to jump back up to the 5 minute, and I'm going to jump to the trades that took on Friday, the losses. Obviously, it's easy to be positive and really reflective about that one because it came off and it was successful. Where we gain an edge as a retail trader is being reflective on the trades that lose, and actually going back and checking on why we got in and whether it was in fact what I would categorize as an A+ setup. So interestingly, I do really want to look at these because losing 2 consecutive trades in a row on the same day isn't obviously what I would want, and also it doesn't happen very often. Obviously, the one thing that we know about trading is that losses are inevitable, but we have to make sure the risk is managed and the capital is protected. Now, on a lot of my prop firm accounts, I tend to risk 0.5% to make a percent. Okay, so anytime I take a position, there's only ever 0.5% on the table, and I'd always recommend to risk a maximum of 1% per trade. And again, it depends on your risk tolerance, because if you're not very tolerant of risk, you might need to be a little bit more conservative with it and be mindful about your emotions and how you're going to feel on the back of taking a loss, because you have to go into the trade looking at how much you're going to lose as opposed to how much you're going to win. Okay, now I'm going to come to this trade first. This was the one for Free Signal Friday. I'm just going to zoom out and I'm going to go into a little bit more detail on this one because I feel like there's a lot on the screen, so I think it's necessary to just take a bit of a deeper dive. Now, at the beginning of the day, I highlighted the current range after the Asia session. The range is simply where price has got to like the highest point and the lowest point of the previous session and then going into the day. So what we often look for as a retail trader is for price to break out one of these levels, and then we look to try and capitalize on an opportunity on the back of that depending on confluences. So obviously one of mine in this instance was a candle closure above the range high. Got a really nice retest on the smaller time frame, and my other confluences, obviously I tend to write them down next to the trade when I take them in. So we had the initial breakout of the range high. We retested that level. We were with the trend as well at this point, so we were bullish on the smaller time frame and the higher time frame. So there's another confluence. It's also trading off momentum, so you can see that if I try and zoom out to get a bit of a better picture. Oh, sorry, misclicked that, guys. Bring that back down. If we really zoom out, you can start to see that obviously you can clearly see we're heavily bullish, making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and interestingly enough afterwards it continues. But back to the position, obviously trading momentum, trading with the trend, and I had another confluence for this one, which was my inverted bullish hammer pattern, which is just down here, followed by a bullish engulfing. So entered on the next candle, and unfortunately you can see this one didn't go into any profit whatsoever and flushed straight into my stop loss, or our stop loss for anybody that took it. One of the other brilliant things about this setup, just looking, is you've got an FVG here, and it's an impulsive candle up as well, candle closures above the last bullish candle on the leg down, so it's a really favourable setup. So if price did come down, we're probably expecting it to react in here and then to continue. Been speaking to my mentorship group about manipulation, and I think this is a prime example of it. We get into the trade, the idea is to speculate on price going higher. It comes down, takes us out, sweeps a little bit lower to collect more liquidity, more money, and then pushes higher. And obviously you can see, if we really start to zoom out, that eventually it does get to the take profit over here, but obviously the stops were quite tight. Obviously I traded 1 to 2, so my stop loss was 100 pips in this instance, and just not quite enough to give it enough room to breathe. So I will review that one again, but I think just looking off the back of that and talking about it out loud, I'm quite happy with the confluences and everything surrounding that. I think unfortunately just on the wrong side of probability on this one. So just reviewed that first loss. I would happily take that trade again. I'll probably categorise it as an A setup, maybe not quite an A plus, but it's definitely an A setup, and it's one that I would take regularly. And yeah, unfortunately the probability goes against me on that one. Now this was the second one of the day. I hope you're all still with me. And this one was frustrating because this one was definitely an A plus for me. And again, one thing that I will mention is that we are trading, or I am trading against the trend here. However, my back testing on the change in the state of delivery, the probability and the win rate returns are really high. So I was looking to catch a sell on the back of this one. We had a candle closure below the last bearish candle on the leg up, and unfortunately again into a little bit of profit. Entered on the change in the state of delivery, targeting internal sell side, actually targeting this FVG that was left behind previously, and also this internal sell side down here. And again, just unfortunate that the probability goes against me on this one, so I pushed into a little bit of profit. You can see my break even point was down here and didn't quite have the opportunity to pull break even, so this one was also taken out at a loss. So because this was 2 losses on the trot, I decided to leave the trades on Friday, because normally I can take a maximum of 3, but at this point Once I've taken 2 in a row, that's kind of me for the day. And it would be important to point out that this loss was taken on a handful of prop firms and a personal account. This one was taken on different prop firms and a personal account. So I took 2 consecutive losses on my personal account, so decided to leave that for the day. So I lost 1.5%, I think, on Friday on these 2 trades. It's not too detrimental to capital. And again, obviously, because of the prop firm rotation that I do, no prop firm took 2 consecutive losses. I had 2 separate losses on these ones. So yeah, would I take this one again? Definitely. It will be documented. I will store it, and I will see what happens when I take my next setup that's aligned with some of these confluences. Obviously, made a couple of notes here about trading into bullish imbalances, managing risk, managing the trade aggressively, which just means that after it takes internal sell side, the first area of internal sell side, I'm probably looking to drag break even, or I would have pulled break even on the back of that. And yeah, like, this is kind of what I do every Sunday. Obviously, I jump on and review and reflect. It's part of the game. You've got to put extra time into looking back on what you did. It's quite tedious. I'm trying to get my words out. Apologies. It's quite tedious at times because you're going back over something that you've already done. But it's so important to reflect and journal. And one thing that I've become quite good at is journaling my thoughts and stuff into chat and getting chat to transcribe it for me. Just speeds up the whole process. And also I try and categorise my journaling. So I put in about emotions, I put in about the technical analysis, I put in about the in-trade management, and I also make a note of when I took the trades during the day. So last thing to point out before I jump back onto seeing my face again, the time between these 2 trades is super important for me, and I'm really happy to see that this first trade was placed at, it says 7:40, but it means 8:40 UK time. 8:40 UK time, finished at 9:10 UK time. The next one that I took was taken at 11 AM UK time, and I was out of that one inside half an hour as well. So very similar in terms of exit points. So that's interesting, just speaking out loud now, thinking about that. I'm just going to jump back onto here. In fact, actually, sorry, just quickly. Obviously, I've started to upload content onto YouTube. I think this is a really great way of people seeing what I do. The plan will be to execute some live trading videos. So what I'll do is I'll place an order in the market. I'll pop TradingView up. I'll pop my camera up so you've got the visual of me, sort of my experiences throughout the trade. And I'll also pop up a screen recording of the order in the market so you can see how price fluctuates when you're in a position. All right, so that's a little update for everybody. I'm going to jump back onto Telegram, and I'm just going to jump onto here. I'm going to stop sharing my screen. 7 participants, yes. So yeah, always quite short and sweet on a Sunday. So I do 20 minutes max, really. But I like to just break down trades that I took. I like to talk about sort of some of my reasoning behind taking the trades. And obviously, it's nice to come on and speak about other things that are going on at the minute for the coaching trader. Obviously, I'm trying to build my personal brand. I'm trying to diversify my content. So obviously, I'm doing free lives. I'm doing the mentorship program. I'm doing my content. Yeah, I'm just trying to get as much stuff out there as possible and try and build a trading community where people can relate and connect to somebody that they can trust in the industry. I think over my 4 or 5 years now of trading, there's been a few people that I've sort of bumped into along the way, but nobody consistently. And I want to try and be that consistent face for everybody, and somebody that people can reach out to. And also, again, just that whole idea of having a community for day traders or beginner day traders. So yeah, and on that note, that will be it for tonight. But thanks to each and every one of you for attending. Really appreciate anybody and everybody that jumps in on the lives. Spread the word, try and get as many people in the Telegram community as possible. That'll be great. And obviously, long term, it'll be really nice to see more people in the lives. We're over 100 subscribers now as well in the free community, which is brilliant. So I'm going to keep pushing that. And yeah, have a nice rest of your evening. Have a good trading week if you're trading. And I'll see you next Sunday for another episode. Okay? Cheers, guys. Thanks very much.